Thank you for coming to my lab today, you guys. It's Tuesday, which is a wonderful day of the week. And I am Becky, and I get to chat with you guys about a psychological conversation. You guys can make suggestions, or I just have to pick sometimes. And this one was inspired by a trading friend who also could even just be myself. This time it was like, different things made me consider this. But the market has been tricky lately. And so I wanted to talk about any traders who could be in a situation where they are struggling. And that could look like any kind of thing for people who are at different points in their story, right? I think that what a trader in a situation that is uncomfortable is going to be different, based on your account size that you trade and your history of trading, if you're new or not. But I want to talk about if you are in any sort of a drawdown, which is not UA, so whoop, whoop. But if everywhere you have been there, you've been in a situation where you are struggling and you have a hit to your confidence. So when our accounts take a hit, I think there's a bigger picture that also you take a hit on your mental capital, which can look like a hit to your confidence. And so that is a very real situation for a lot of us where it's hard sometimes to put a trade on if you're feeling kind of beat down or worried or second guessing if you have a good system or not. And so I want to talk about navigating through that period and rebuilding your capital, but also like finding your strength again to just like execute your best trades when you see them popping up for you. So that is what we're going to talk about today. Thank you everyone for being here. Excuse me. Yeah, you need systems to save you from yourself, which is absolutely the truth. And that is a big part of what you can do to help you navigate through the drawdowns. I do think, though, it can be hard because I don't know if you've been there, Ace. I don't know who's been there, but I think most of us have been there when we're just still in a losing streak. You can protect your account and have it lock out at a certain threshold, but sometimes if you're having the lockouts hit every day, that can be death by 1,000 paper cuts. And that is less pleasant. It's less stable of a situation to be in, and it's harder to push through because the weight can feel a little bit heavier in those moments. And I want to preface this and start with the session that this comes from real experience, because I would love to say that I am daily, day over day, consistently profitable, always follow my rules, super steady, and always just raking in the money. But that is not actually the truth. And I prefer to just be real with you guys. And I think that's part of what helps me have these conversations is that I'm not trying to speak from a mountaintop or, any kind of, I don't know, like I am not the 20-year veteran around here. We are so blessed to have 20-year veterans in our trading streams. Mike and Matt and Breezy, just to name a couple that are like boss traders who have a lot of experience. I have experience enough to have made some money from the market, but I certainly still feel connected to the struggle days that were not super far in my history and sometimes still creep in. And so I just want to say that like weathering a period of drawdown will absolutely humble you. That's right. And the idea is to be humbled and take your licks and shake them off and get back in the game. And that is the dream, right? That's the management. That's how we can manage the long-term career as a trader. But it's not as easy as we would like to think it is in the beginning. When you are still building up your edge and your stability as a trader, it's not as intuitive, I think, or instinctual or natural to be able to just keep getting back up again when you just get punched in the face by the market. And so if anyone has having a period where this volatility and these swings and these fake breakouts are punching you in the face, I don't think you're alone. I think it is widespread. I mean, if you pay any sort of attention to the social media of the trading world, which I would not blame you if you didn't, because it's kind of insane sometimes what people will put out there, but it is tricky lately. Drawdowns it can be really frustrating, but it's something that I think a lot of people experience, and I think a lot of people are going through it now. And so the way I kind of frame this episode up is to just talk about what is happening when you're in this period, psychologically, practically, for our accounts, for our trajectory as a trader. And then we have to start in square one, right? We have to start with how do you stop the bleed, because you want to be able to have accounts to trade and you want to be able to have mental capital to be able to be a trader. And so part of that is stopping the bleed and then diagnosing it, figuring out what the root cause is to the struggle that you might be experiencing. And then we get into getting out of it. That's the rebuilding with a steadier kind of growing your accounts back up. You got to sometimes in those situations figure out how to lower your leverage, but still have enough skin in the game that you are rebuilding, and really get back to that long game mentality that is so stabilizing for traders. And that will rebuild your confidence. And so that we'll talk about both the technicals and the psychological elements of getting your feet back under you, per se, as a trader. So let me just, pull the crowd. Like, does anyone kind of know what the situation feels like, whether you're in it now or you've been in it in any, like the recent, maybe last 6-8 months? Have you been in a situation? Maybe type maybe in the comments if maybe you've been in a situation where your account has been down. Every new loss is frustrating and it feels like it's compounding the damage. Like, I don't know if everyone here, right? When you get an account and you blow it, which sucks, and then you get another account and then you blow that one, like that, it can sometimes like pile upon itself. And then I think sometimes when you get in a vibe that is worried, it's harder to pull out. Like, the deeper that sensation gets, the harder it pulls on your psychology, the more impact it has on everything, including your executions. And so it's all wrapped up together. I mean, I don't think that unless you are a literal algo robot, you can't really have trading be in an isolated box. There are external factors that are a play at it. Thanks, you guys. And so if you are in that situation, like, it's shaky. There is behaviors that we will make if we're having that sort of emotional pull on our systems, on our body, on our approach to trading, that will make you do poor things. And I know because I've done them, such as second guessing. And so then you wait and you don't catch your ideal entry because you are just not sure if this was the trade, because yesterday it didn't work. And yes, it's my setup and I see it again today, but it didn't work yesterday. And so then you second guess it, trade progresses, you get frustrated, you join late, and then you're getting a poor entry and your risk management is high. Or you do get the ideal entry, but it hesitates, and in a way that sometimes she does. I mean, the market doesn't move in a straight line. And so then you might cut your winners short because you are second guessing yourself. And then the flip side of that, right? You don't get the ideal entry. The trade isn't working out, but you really want to land a win. And so taking a stop out just is not appealing, right? And so in that situation, you don't hold, you don't respect your stop loss. And so then you can take a bigger lose by holding that loser too long. Yes, that's right. There is a random distribution between wins and losses for any given set of variables. Yeah. I mean, I think that no trader is consistently always profitable, because that's a part of putting the risk on, and that the market is not going to be super consistent. And the trade that will work, 7 times out of 10, there's going to be certain market conditions or certain little pieces of your edge that you didn't notice that it will lose. And so that has to be something that we respect. And I think it takes time to fully internalize that and really respect the fact that that's just a part of trading. And it's easier to not respect that game of probabilities that we are in as traders when you are in a drawdown and your confidence has taken a hit. That's a situation specifically that I'm kind of focused on today, because we can get there. It's really easy to get there, right? And it could even just like 2 red days in a row could pull someone into am I good enough to be a trader? Do I have this? Can I achieve my goals? Did I just really damage my accounts? What's going to happen tomorrow? That mindset kind of slide that you can go into is really a tricky situation. You question, is it me personally? Is it my system? Is it because I didn't sleep last night because the baby was up? Or is it just that the market is bananas and we are potentially engaging in a massive world war? There's a lot involved in it, right? And I do think that because of all of those things, right? I think that the market has genuinely been hard. And I'm not a type of person who likes to place blame or make excuses. I very much believe in owning our situation and our choices. And if we are over trading, if we are revenge trading, that is a situation where you're damaging your accounts. But I do want to call out that I think the market has been challenging lately. And I think that that's a genuine situation, that it's been unusually challenging in the given geopolitical environment. It has been choppier. We have been bouncing on each other back and forth. There's been false breakouts that have really just came back and taken out everyone. Yeah, I like the strategies. I like you guys that throw out strategies. It happens. The first time traders are getting killed, and early traders are getting killed. They're getting wrecked. And it's because we are getting really high volatility, but low follow through. And if you really think about that, high volatility, but low follow through, that's a recipe for disaster if you are not really recognizing that you're trading in that situation, where you'll get these giant outsized candles and you're like, this is a statement candle. This means the bulls are in charge. I need to be in a long. And that was the high of the day. Like, it just faked out everyone, got everyone FOMOing, chasing the momentum. And then it's like, nah, we're just going to slide down until every stop has been eaten. And that day has happened, yesterday? And like today, it happens a lot, especially on the smaller timeframes for intraday traders, where you might be trying to trade with some leverage. And so then you get in a situation where it really is a big deal when there's no follow through on a momentum move that maybe previously would have been really realistic, that we'll get a directional candle and then a pullback entry. But it's been tricky lately. So I think if your stats are down, I think that I just want to call out that that is not an isolated situation just for you. I think that there's a lot of experienced traders that are also, have had proven systems that have had them be financially, in profit for considerable amounts of times. And they are also struggling right now. And so putting this context around the given situation, if you are currently in this period of drawdown and potentially impacted confidence, I see you. That there is some validity to the challenges that we are facing on the charts right now. And then the flip side of that, right, too, is that it doesn't actually excuse poor discipline, but it does kind of reframe it. I think it does put some context around the fact that it can be that we are engaging in behaviors that are not helpful to us, but also the market is triggering. Like, these are triggers that we each could experience and really feel the hit of that. And that can cause, the poor discipline more easily. Half price, stronger. I like that image a lot. So the false breakouts, right? That's something that could work that could be a trading strategy for a lot of people, is a breakout trade. But we have been encountering those not being as consistent lately. Same thing with the whipsaw conditions, right? Which is the high volatility reversals are punishing both sides of the trade. And so it will fly up and you think that's the direction, and then it flies back down. And so even no matter your bias, there can be a tricky situation both ways. So I just wanted to say genuinely at the start of this that if this is resonating with you because you're in a situation where you're not able to take profits on a system that has been profitable for you, there is more to that story than just potentially, your system never was functional, because that is not necessarily the truth. So if you are in a situation where you're not as okay as we might like to believe we are, although I wish you all maybe aren't, but if you are, or, maybe ever have been and could potentially be again, that's why we're here, right? So in that situation, it has to be a priority to stop the bleed, because I don't just have enough money to throw continuously at my account and rebuilding my capital all the time and repurchasing new accounts. Like, that's not something that I want to engage in. I don't want to just throw good money after bad, as the saying goes, of, it's got to work tomorrow because it didn't work today, but I believe in my system. And so it's got to work tomorrow. And so I'm just going to renew everything and refund and what have you. I think when you're encountering multiple points of resistance in your trading, that's not really the time to push harder and just restart everything account, because that can get you into a situation. And so stopping the bleeding, I want to encourage you to think about it as not a defeat, but a strategy, which I love that reframe, because it doesn't mean that you're not a long game successful trader who's going to be a trader for 40 years and have your rental home in the Bahamas or whatever you want. But it could mean that during this period of growing that trading career that you are growing, it needs to be a time of reflection and processing everything that's going on out there in the world. And so I love the idea that the traders who recover fastest are not the ones who fight the hardest in a period of drawdown, but more so the ones that have the discipline to step back and say, what the heck is happening? I don't like this drawdown. I don't like it when I have red days in a row. Is it me? Is it the market? Is something going on in my personal life, or I'm not sleeping at all because I'm in a situation with my spouse or whatever? Like, is it bigger than me, or is it the market? Does my strategy need refinement? Do I need to downsize my leverage in that situation? But when you can take a step back and really process the situation, not spiraling into losing the same amount or bigger day over day, will protect you and it will help you move forward faster. So is your brain working against you in this situation? I think there's absolutely an argument for yes. Yes, it is. In a period where you could be in a drawdown, unless you are really quite mature in this game and you respect the fact that it's fine, you come back stronger, you've got this one good trade at a time, and you can really kind of wipe the slate clean with your mental capacity. If you're not quite there dialed in, or you might be in a period where it's harder, yes, your brain is putting you in a situation where it's harder, because losses activate the brain's threat response. Like, you think about a threat response, we amp, you amp up, you get your energy behind you, your muscles tense, your heart rate advances, your respiratory rate advances, because you want to fight back, to handle it, to make it okay again, to get back to that happy medium where everything was working great. And so your decision making in that situation, it shifts from your prefrontal cortex, where you're rational and strategic and focused and dialed into your plan only and always managing your risk, to the amygdala, which is that emotional part of our brain, right? The fear and impulse and survival mode. And, you're punched, you punch back. Like, you're not even questioning who you're punching. It's just that mismarket in general. And so that shift in the literal way that your neurons are firing and the priority your mind is making with how you pursue your trading is a very real situation to acknowledge that your psychology, your physiology is a situation that could be making this all harder. It makes you lean more into the revenge trading before you make the smart choices, and paralysis, which is freezing on valid setups, because maybe you did just revenge trade and now you're second guessing everything, and you don't have the same risk capital because you just engaged in 2 revenge trades and you're in a drawdown on your day. And so you have a paralysis experience on a valid setup when it finally does present, because the whatever monkeying around it did that you were in the mess with is finally done and a good setup could be coming, but you are now quite red on your day. Then you could freeze on that setup. Also, what about the overanalysis, right? Analysis paralysis, or overanalysis in a way that you're justifying the trade being good when it's maybe not good, right? And so in that situation where you're overanalyzing, say the trade's going against you and isn't quite to your stop, then you start to try and justify, maybe I should move my stop. Maybe the trade is actually invalidated if it goes one more level lower. And so I could maybe average in and move my stop in this situation. And so that sort of overanalysis can get you into a situation as well where you get into a dangerous trade. And that not necessarily is what we do when we're thinking super clearly. My trade setup is this. If this area is invalidated, then I'm out. And I need to wait and see what is presenting on that data moving forward. And then also the size creep, which happens so freaking fast. Like, somebody put a comment, so I'm not the only one, but a size creep is a real thing where I have done it where I want to recover faster. If I'm trading my normal size and I am red 1 or 2 trades, like I preferred when my account was less red and was growing. And so maybe I want to just do this one trade that looks really good with double the size, because then I can be out of this faster. I have done that. And I think that is a size creep, a leverage situation that is easier to justify when you're in that amygdala part of our brain where we're more impulsive and making choices that will make us feel better faster potentially, but not logically necessarily with our normal healthy risk management. And so I want you guys to sort of like recognize that this doesn't make you a weak trader. Really, it's like the neuroscience behind the situation. It's our brain trying to protect you, but actually really making your trading a more difficult situation. Double the size. Yeah, I know. It's a real thing. So when we stop the bleed and we recognize that neuroscience is not going to help if we keep pushing harder at a system when we're in a struggle drawdown situation, then what's the move, right? And I think that the move is to diagnose the heart of your problem. Like, what the heck am I doing in this drawdown? Why? Why am I having multiple days that are red? Is it me? Is it my system? Is it the market? And by diagnosing the heart of what is the biggest struggle point, that is so important for getting out of this situation. And that's what we want to do, right? We want to get out of the red. We want to get out of the drawdown. And not all drawdowns have the same root cause, which is a very real thing to acknowledge as well, that not every problem is from the same source. So a couple different ideas here, right? When your issue is psychological, that is a great point, that your system will still have edge, but emotional interference is corrupting that execution. And so you're revenge trading, you are fearful, you're oversizing, you're trading when you're sleep deprived. And so that means that your system is good. Your A+ setup that you only engage in, that could still have a 70% win rate. And you're just monkeying with it. You're just making choices that are not to only trade that situation, that are to get you into situation that monkey with your strategy. Basically, that's a psychological diagnosis. Oh yes, my friend, Trading in the Zone by Mark Douglas is excellent. I have read that a couple of times, and I second that recommendation. Some great points in it. Okay, so another diagnosis, it's the system. So maybe your edge has degraded. Your rules are unclear potentially. Maybe you are newer to trading and this is your first like trade plan write-up where you have never really had a playbook before. You've learned from multiple mentors and you have a general understanding of the market and you have an established system that you try to trade. But it could be that it just needs refinement or market is not really playing well with it because you need to kind of shore it up basically. Your rules maybe are less clear. You don't super clear on what it looks like when your trade is failing. And so then you need to be out of the trade. It wasn't potentially robustly back tested. Maybe you forward test it. You just trade every day, your same market. And this generally tends to work. So you try to generally do that. In that situation, it could be that it's just not robust and active and current enough with enough data behind it. And so that could be part of the issue with you not having a successful trading outcome as well. And then, another aspect of that is that it really could be the market, which conditions have shifted outside of your system design environment. And so it could be choppier. You could have lower conviction setups and more noise that are really complicating your executions. And I think that absolutely is a factor right now. Excuse me. I mean, we've talked about this geopolitical situation where there's just threats of war every which direction, and different countries are stating different things, and it's conflicting and it's concerning. And I think that is causing some volatility and some manipulation with the market that is harder to read and harder to have clear in a consistent system right now. And that is just factual. It's not an excuse. It's a factor right now. And I think, bearing that in mind and really thinking about your trade setups and when you are encountering resistance with your outcomes is super important. So on this one, the honest self-assessment here is the action item on this diagnosis. And that is pulling your last 50 trades, pulling them out of screenshots, out of your trading software, out of your own journaling, and then tagging each one just with a simple quick analysis. Maybe you've already done this, or maybe you haven't specifically, but you could add it into your review of your journal of your trades. And that is, was this a system trade or an emotional trade? And the answer on those 50 trades will generally reveal a culprit. I mean, potentially, you could have a 50-50 split, but I would argue that would be surprising. Generally, when we are not trading well, it's one or the other. If we're super religious on only trading our A+ setups and it's just not working, then you're going to probably think about the system or the market more so. But if you're just making trades, you're just throwing around contracts like you're nobody's business on the market, I think that you might find that there's more of an emotional trading situation playing into that. And having that data behind you, you could literally say to your mentor or your accountability partner or just your community in general that I am 80% losing on emotional trades and I've got to get my energy together because this is not how I want to behave. This is not the outcome that I would like to have as a trader. And if you are someone who wants to be a trader for the next 40 years, calling that out sooner and addressing it directly is going to be a power move. So there we go. A little bit more on this, how to tell the difference. So signs that it's psychological specifically is you're deviating from your rules on losing trades. You moving stops and you're holding your position past your actual exit criteria for that trade, or you size up in anger. Who's ever done that? You trade outside your planned session hours. Like maybe you didn't do well in New York session and it's still kind of carrying over, covering that you really wish you had a profitable day. So then after market, you just kind of open your trading system and start side-eyeing the market and engage outside of your planned session hours. Maybe you have distractions. Maybe you don't have an established edge at that time, but you just want to push it a little bit. That could be an emotional choice. Your win weight is similar to your average, but your P&L is worse. So you're still winning a normal amount, but your accounts are suffering. And that could be a situation of you're cutting your winners short and you're holding your losers long. And that will create that outcome. And that is an emotional trade management situation. Whereas if your trade system is still working, but your P&L is struggling, then maybe you're not following that system specifically. Now, the flip side of that, what if it's the market? So you really are following your rule every single time. If you see this at this level, then this indicates this trade has a high likelihood of success. So you're getting in. And that maybe worked really consistently months ago. And now it's just not working consistently. Maybe your back tested setups are hitting stop after stop where they used to work, and you really are honoring your entry criteria and struggling. Or your win rate has dropped uniformly across different clean setups. And so you really are honoring your setups, but you are not getting the rate that you consistently have gotten. That also is the market, right? And then also traders using similar strategies are in the same boat. So say you and a couple of close trading friends trade very similarly. You were maybe raised up as traders together. You share notes and talk about your trades, trade the same market. In that situation, all of you are in a drawdown situation. That could be a sign that the market is shifting and this playbook that you are operating out of is just really not it right now. And that is something that you want to call out and talk about as a group and address within that cohort for sure. Now, these can be kind of delineated as what the cause could be of your drawdown that you could be in. But most drawdowns, I would say, are a combination of both. Now, I think that there's the argument for this and why I'm kind of bringing it up at this time in this geopolitical climate that we're in is that I think that this is a situation for a lot of people. And I have had days where I have had red outcomes this week. And I do think that there is a combination of both where the market condition has shifted and that could potentially trigger your performance and your emotional response can make it worse. Because if your trade setup that usually works and it is your A+ setup and you get in this way and it usually wins, or at least it goes a different way and more positive outcome, but it's just killing you. It's just getting you taken out. And so then you're going to get frustrated in that situation. Maybe you pull your safeguards, your guardrails, your rules, and you fight with mismarket and you fight to be right because your system should work and it's worked in the past. And so that's where a market condition has shifted and your emotional response is not staying steady and patient through it, but it's responding in a frustrated manner. So I think that we have some work to do on that in this situation of separating the two is an important job of recognizing how the market has shifted and what we can do to deal with that. And then what your response is, and if you need to deal with yourself on that as well. So there could be two sort of areas to target in this situation. Girl, Fatima. The market is kind of wild lately. It's been kind of, the short last night, like it just started falling like crazy town after it was consolidated and then dropped. Yeah, that's the thing is that the market conditions are something right now. That's a real situation. So let's think about it this way. Let's think about if there is multiple factors at play that could be putting us into a drawdown. How do we get out? Right? Like no one prefers to be in drawdown. We're all traders to make money. We've got goals, we've got intentions. Maybe we want to eventually be full-time traders. So let's do that, right? Let's aim in that direction. So rebuilding is a process, not an event, right? You don't come back from a drawdown with one big fat green day where you really believed in it and you went in heavy and now your P&L was beautiful again. If it is a bigger, more complex drawdown situation, sure, that day was probably good, but I don't think that that's the rebuilding situation. I think it's much stronger when you come back one disciplined trade at a time. Is this happening right now? A news jump? Oh, I closed my chart so that I can run my stream and record and everything. So I don't know. You guys watch it for me. But I do think that this is the way to do it, you guys. And I know that's not the flashy, sexy, happy, fun way that we want to rebuild our accounts because everyone loves like a giant boss trade. But that needs to be within your parameters. It could be a home run situation where you got in with regular size and you got to really hold to more extreme targets because it's an excellent situation that was playing out. Those I support. But if you're over leveraging, trying to make it back and you get a lucky win, that's not a sustaining process or plan to get out of a drawdown. But I do think it's much stronger to be disciplined and get out one good trade at a time. So think of this as an athlete in rehab. You could be a very strong, highly successful athlete, but you don't sprint before you can walk after you have an injury. If you have an injury, you need to care for it, elevate it, ice it, rest, stretch it out, regrow it, start walking before you're running again. So I think that this is the direction and the energy behind rebuilding from a drawdown, both mentally and technically. And we're going to get a little bit more into the specifics around it. But I want you to really think about that analogy of an athlete who is injured and how would their physical therapist and their doctor encourage them to get back in the game to run their strongest race and get back. Maybe they're an Olympian who takes an injury, right? This happens. Like, what would that high performance athlete be told and advised to do? It would be to rehab and ease back into it and do smart choices, one stacked on top of another, and let the days rebuild them. So What's that framework? That looks like protecting your capital above all else. We are in the money business. We are using money as a tool to make more money out of thin air, out of mouse clicks. And so in that situation, we need to have capital in order to execute this system. Now, you want to be able to put trades on. You need to have some skin in the game in order to rebuild your accounts and to be growing and to have the trades that you are taking matter. The Trading Sim is an educational platform and situation, but if you are trying to really get good at a trader, putting some risk on the table is important. But you got to back off on your size if your accounts took a big hit. Yeah, no account if you're broke. Yeah. So sometimes your only job is to not lose more, not to make it back right away. And so if you are in a period where your accounts have taken a hit, you are a funded trader potentially, and you are in drawdown, or you've blown an account and you get a new one, it's not great to reset all the time and pay those fees. And so putting some caps on it so that you are not hemorrhaging money during this rebuilding period is important. You have to protect your capital, because to make money, we have to have money to leverage. So protect your capital with your size choices. Now, also trade only A+ setups. I think for anyone who's been a trader more than a few months, you probably have delineated what your best setups look like, what they feel like, how they present, how you get in and out of them. And we know kind of intuitively and hopefully written what your best setup looks like, because then it's so much easier to honor it by having them written down and understood as your playbook, basically. And so if you are struggling, this is a period of work. Like if you have decided you want to be a trader, then you need to put some work in your A+ setups to thoroughly understanding them. And Waji, I mean, my girl on this, right? Like this is where we are at, of like we having a really strong trade plan written, saying this is how I get in if I see this, and this is how I manage it, is so powerful, because that's so protective. And it helps you not trade emotionally because it's written. Like you don't have to overthink it or second guess it or think about it in the moment, on the fly, in the gray area. And that will create all kinds of different outcomes. And so if you have it written out and you know what your best setups are, and a 9 out of 10 confidence trade setup, then that's why you put your capital on the line in this situation, because you're in rebuilding mode. So you're not interested in all the messy BS in the middle that could, should, maybe will work. You want to prioritize your best setups that you understand and you see most clearly. And so really, if you don't have those super clearly written, I would encourage you to take the time during this drawdown to do that. I'm just going to look at what Ace posted really quick. Yeah, it seems like there might be some news coming out on Iran. Like, you guys, I'm not going to pull up my charts, and so you guys can chat about in the chats, no problem. But I am not watching that, because I just kind of am going to stick with this conversation. But please chat. Dang. Okay. Thanks, Breezy. You kick it back and forth with them if there's something going on the bigger time frame right now. Okay, so in this situation, right? So we talk about how you want to lean into your best setups. Okay, so track everything, right? So that's how you really get your data on what is going on with your trading, what is working and what isn't working. And so writing out your trades. And I would encourage you guys to add into that your trading journal. Is it a strategic trade or is it an emotional trade? Put just a one item, like literally one word on each trade, is really going to give you some good information when you look back through your journal. If you are leaning into your strategy, or if you're allowing your emotions to dictate where you're getting into the market. Important information. So I would say that it's not just numbers. Like I got in at 66.20, I got out at 66.16. It was a win. Like go beyond that. Why did you get in? What strategy was it? Were you focused and trading your data, or was it like a revenge FOMO board trade? What have you. And so track your data during this rebuild period, because it will help you figure out more into the diagnosis and what the bigger issue is and how you can fine tune, because this is a work period of getting yourself stable again by good choices. And then when you kind of have dialed in a little bit, you're doing these things. You're sized down for your capital that you have. If you're in drawdown, it's going to be a little bit smaller size, because math. You have less money to trade with. You've got to size down a little bit so that you have that capital to trade with. You're focusing on your highest probability setups, and you're tracking everything. That way you can shore up your systems. And then here is where you can scale back up gradually. So you can earn back your size with consistent execution. Yeah, exactly. Good point, Swaji. So we all, I don't know, I can't say all, but I do think that I certainly prefer to trade my full size, or, occasionally have like a real big banger of a trade. And that looks like having some leverage on. That is something that I think if you're a day trader is enjoyable, right? Like that is where we're headed and what we want to be able to do. But if you're in drawdown, you got to earn that right back. And I don't know if that's annoying for me to say and you to hear, but I think that it's stronger, and that's a disciplined choice where you're saying my account is only so big, and so I got to get back up to that size by making really good choices. And so you want to make sure you're focusing on the cleanest trade you can, and then you can slightly increase. Okay, see, Ace is solid. And he has put himself in one micro jail as well when you're in recovery, which is what I'm saying. Like jail is like not super duper wrong. It's like you're on a probationary period where you're like pulled some bullshit and you've got yourself in a situation and you're down it a little bit, but you don't want to keep resetting. And so it's better to, even though it might suck in the moment, it is better to downsize, focus on your process, focus on your best trades, track it all, and then earn your way back out, which micros will add some money in, and you can get there with this system. It's just more methodical and it's a little bit slower, but it is steadying. And if the market is pulling some crazy town business, such as the current geopolitical climate, where it really can wreck you if you're a full size and you're on the other side of the market. I mean, even with slippage, even with your guardrails in place, there's slippage on your exits too. I mean, it's a volatile situation. And so methodical and slow, given the fact that a lot of drawdowns right now might be both market and psychologically driven, smart for that reason as well. So a little more on that, right? The leverage is something that a lot of people will fight, myself included, because I don't love leveraging down. I can get used to a certain kind of P&L from a certain kind of size. And if I'm in a condition where something's going on, I mean, some of you guys know that I lost a loved one this winter, and that grieving period was really hard for me. And there's just been some external forces. And I think recognizing when things like that happen, it is a hit to our ability to focus and rest and persevere. And in those situations, when we recognize that there's something going on, whether or not you like it, sometimes leveraging down just really is the situation that is the safest. And so reducing size during a drawdown honestly often really does improve your decision making more than a strategy tweak, because it's taking the emotions down several notches. Because if you're used to seeing like a max loss of one trade with two minis could be a loss of $600-700. And if that is something that you've encountered multiple in a row, going down a size where a max loss on a micro trade is only $200, you're going to be less triggered. You're going to feel less of a sting. It's like a hit, but it's not as big of a hit as you take in, or an outsized hit. And so you can stay steady longer. You can prevent the amygdala getting triggered and your emotion cascade from happening. And so the emotional pain is less. And so you're like I said, your prefrontal cortex, it can stay online and more attentive and in charge, because you're not triggered by a larger hit P&L wise. And so you can start to see the market more clearly because you're not triggered emotionally from the big numbers. And so you can execute your rules more steadily and capitalize on those clean trades. You'll have less hesitation and freezing on potentially a good setup because you're in red on your day, because you're not badly in red, because your leverage was smaller. And so that helps you take your trades to the best of your ability, because you're not feeling emotionally driven. I think when you are still trading with high leverage, if you are feeling in kind of emotional way, there's going to be just more fear. And that fear can cause clouding of judgment and an acceleration of damage. Because if you are fearful, you're frustrated, and you are trading emotionally, it's so fast to start taking double and triple the size of losses. So I do think that it is justified and advised, and to really think about your size in those situations, and to downsize when you're rebuilding, because it closes out some of that emotional noise and it settles in. Your executions can be really strategic, and you can have less of that freezing, hesitation, and mismanagement when you are trusting yourself a little bit more and you're not as scared of your stock getting hit. I do think that confidence needs to be earned, not assumed. And so I think that's a situation with anything. When you are fresh out of college and you're new in whatever career, such as like when I was a brand new nurse when I was young, I shouldn't have been, nor was I a confident nurse, because I hadn't seen everything. I did not know everything that was going on. And so I needed to ask questions and listen to mentors and double check things. If I wasn't sure about a situation, I needed to ask another nurse to check my back and check this patient. That's the same thing in trading. It's important to earn it with trading, to like have a system and then trade it and then get better and keep trading it and do your best with it. And I think that there's a critical difference between an ego type of confidence and an earned confidence. And Miss Market is going to humble you. Let me just say, she will humble you in not a kind way if you are ego driven, because that is just not going to work. So earned confidence is rebuilt through repetitions of disciplined executions, not through one redemptive trade. One redemptive trade gives you a high, like a drug, and there will be a crash afterwards, and there will be a hunting that high again, which is the addictive part of trading, where those big outsized redemptive large leverage trades trigger that side of our body, which is dangerous. And I know that it is appealing, but I also know that it is dangerous, because chasing a high that is not a normal part of your trading variance is risky, because then it's harder to accept a small win. And you will have more confidence with more, honestly, data behind it to shore you up in that confident state if it is made based on reps in the game, reps of executing your system consistently per your rules and seeing it play out and knowing your stats are real because you're trading your system consistently. And so you can trust that they're not like skewed stats because you are trading emotionally and over trading and what have you. But if you're trading really consistently and disciplined and you're steadily improving again, that will literally, just by the name of the situation, rebuild your confidence, because you will know that you are doing what you need to do and your outcomes are following that. And that is a natural algorithm for confidence building. And I think if you get kind of focused on the whole ego of like, I've been a trader for 3 years maybe, and so I don't lose anymore. I don't want to have these losing days. I want to get back to my payouts. And so I'm right. And so I'm going to hold, and this is going to work, and it's going to come back for me because it came back for me last week and I worked out. And so it's going to do it again. That is not necessarily a system driven, it sounds like, you know what I mean? Versus I'm executing my systems consistently and I trust my process. And so the outcomes come. And even if today is red, it's okay, because it's not going to be outsized red, and I'm going to be all right day over day. And so this is the whole argument of like, everyone wants to be a confident, strong trader, but you can't buy that. You can't assume it. You can't wish for it. You can't have one giant outsized trade created for you. You have to earn it, which is the hard truth, right? It's the same thing with muscles. Those have to be earned. Like, you can't just have one really hard 3-hour session at the gym and be ripped. Like, you're probably going to tear a muscle and be real sore the next day. But instead, like consistent reps, day over day over day over day over day over month, that is how you get ripped. It is not in the 3-hour gym session. So to do all these things, you have to have grit, which is something that I am madly in love with, because grit is choosing to stay in trading after drawdown, and it means that you are persevering. It means that you're not quitting. It means that you can take some hits and stay chill and focus and get your best system to happen. What the heck of this world, huh? Okay, so grit, right? Patience over urgency, which is such an important part of staying in this game long term. The market will always be there. And so your next trade opportunity is not worth destroying what's left of your capital or your confidence in order to get those outcomes. And so does that make sense, right? Being urgent to fix it right now can get you in a situation where you take a large loss, versus being patient and recognizing if you rebuild slowly, then the outcomes come. But it's not worth like wrecking and putting yourself even deeper in the hole if you can avoid those choices. And so trying very hard to be patient during the rebuilding period versus urgent is going to help stabilize you. Now, grit over stubbornness. Oh yeah. Stubbornness is a real situation that I think, I think all of us can be stubborn at times. I think that's a normal human condition, where you want to just push it and win because it has worked in the past. And so I want to keep doing the thing that I did because it worked last time, but maybe it's not working right now. And you need to kind of acknowledge that and change based on it. And I think grit is, recognizing I have had periods of success. I am not currently this week successful, or whatever period you're in, but I want to adapt, figure out what I'm missing, and grow from there. That is a different type of approach to a drawdown period, where one is like stubborn that it's going to be fine because it's been fine before and it's going to turn. Whereas grit is like, I can be a good trader. How can I pivot right now to be stronger because I am a little bit red? And then we got to always, a lot of things come back to this long game, right? The long game mentality over a quick fix. And so traders who last 10 years are absolutely not the ones who recovered from a big period in just 1 week. But instead, they're ones who don't even think about that. It's the ones who don't let a bad period of any kind define their trajectory, define who they are as a trader. You don't want to get stuck in the hard times or really perseverate on the hard losses or fight to get it back faster. And then you can tell everyone about this big, like giant, gorgeous win that you had. But instead, it's like you don't focus on the P&L so much. You focus on your trading execution and the long game and being your best trader self. So having the strongest, most robust trade plan and honoring it to the best of your abilities, like that is the equation for getting out of this. So what are we going to do about it specifically? It was a great conversation about all the ways of like dealing with a drawdown. So there is like a system where you can try and pull out of this. And so that's, I want to always talk about the issues that any one of us might be going through, but then how can we improve, get better, get a nice P&L, right? A gorgeous P&L makes everyone feel better. I get that. But RQ is all about full porting. So you behave, sir. But I think this is a routine that can work for us. So if you are in a period where you are taking a little bit of a hit to your accounts and your confidence, let's talk about what we can do. And so I think that there is a method for before you start trading, during your session, and after your session, because I think you want to focus on all of the things. And so structure is your best friend. When your confidence is shaken, a routine really does place certainty more so than what your performance maybe is giving you, because you can lean into the fact of, I'm going to wake up at this time and consider all of these things, XYZ, look at all of these factors, and I'm going to write out my trading plan and execute if this happens and communicate with my people during that time. And that will be stabilizing. And then your performance can come back after that. You can't rely on a performance because that's going to be variable, but you can rely on your preparation, I guess is the point. And I do have a couple of other videos out there about a pre-market routine if you don't have one, but I would definitely encourage you to figure out what your routine is that sets you up for success the best. And then think about your wins and learning from the losses. And so you want to learn from every trade. And so during your session, you want to trade your system to the best of your ability. But post session, you really want to kind of dial in what can you learn from your trades. And so during a rebuild phase, you want to think of it as like you are in a little bit of like a probationary period, essentially. And so in that situation, you need to trade carefully and then see if you can take lessons from anything and everything that will make you stronger coming out of that. Because if you have damaged your accounts and you are in a situation, you need to find some lessons in order to get out of there. So tracking your rules, adherence. Have you guys done this before, where you don't just track your P&L and your trade and your win rate, but also track if you're following your rules? And that metric is super valuable, because if you are trading your system consistently and you're still losing, that can be the data you need to know that your system needs tweaking. And the market really is crazy town right now, and you've got to adjust multiple things. And so having it be if you're trading your rules or not, if you find that you're not ever trading your rules, you're trading like 1 out of 5 rules, maybe in that situation, maybe consider adjusting your approach to trading and backing off and figuring out what is up with you. That way you're not following your rules. And if you want to get that P&L back, maybe you adjust, because if you're only following 1 out of 5 rules and you're like, I'm so red, try following 5 out of 5 and see if that turns it. You know what I'm saying? Like, and that is information you can get by tracking your rule adherence. Yes, exactly, trader. Following your execution is the most valuable thing, considering following your P&L, because everyone sees your P&L. Like, that's not something that we can easily ignore, but you can ignore whether or not you're adhering your rules. But if you're paying attention and you're getting the data from that, you guys, it is facts in your face that is important to consider. So you guys hung out with me on this lovely Tuesday spring afternoon. And so that means that you're not quitting. It means that if you are in a drawdown, you're still going to push through it. I think that the comeback is always harder than the setback, but it's worth it. Like if you got to a point where you were profitable and you're in a drawdown now, you can be profitable. You have already proven that. The facts are there. The statistic is there that you can trade profitably and you can trade well and you can have a winning streak. So then let's do the hard work to get back there, right? There's a recipe for that. There is a way that we can approach this type of situation that you could be in order to pull out of it. And so I think that the traders who instead focus on the work and come to sessions like these and Matt's lab on Thursday and our live streams with the other coaches, by having these conversations with traders who have a good posts on the market and a good read of the market and our way to manage your system and psychological tips for you all, and not just sitting in like a little bit of a pity party at home where you're just frustrated and you're feeling the emotions and you want to choose to be isolated or quiet about it. That is not a recipe for a fast recovery, but instead, if we fully own your situation, I want to get this right as a trader. I want to be the best trader that I can, and I want to have the money that comes from that. And so then I want to dial into these things. I think that is really helpful. Yeah, no round tripping. I gotta see the market, what's going on right now. But I would say that identity is the most valuable asset right now. And so I think that you can protect yourself by protecting who you are and how you show up. And that is important for rebuilding your confidence, that you can lean into the fact of, I take trading very seriously. I do respect this as a business. Tell yourself this and then actually believe it. So I do respect myself as a business trader. I respect my capital and I respect my process, and I am going to have a good P&L outcome from that. But if I really do respect myself as a trader and my process, then I'm going to follow XYZ rules. And that will help shore you up through this period of leaning into that process. So I think that the system is, just kind of recap us and round it all back out here before we take off on our Tuesday afternoons. If you are in a period of drawdown and your accounts, your capital, and your confidence has potentially taken a hit, I think that there is a process for this that I would encourage you guys to think about and to lean into if you need it, and which maybe is not right now. Maybe you're killing it. But then if you do find that at any point you are in a period of drawdown, try and remember this chat. And these will be posted on YouTube if you ever want to refresh yourself. But stop the bleed. When you are in red and you are losing accounts and you're losing capital and you're can't even trade your normal size because your account is littler, you got to stop the bleed. You got to reduce your size immediately. You've got to set hard daily loss limits, which our platforms are really advancing more and more every day. And you can say, a daily loss limit is XYZ, and I don't get to trade after that because I just am not in sync enough with the market and I've lost enough that I want to wait for better opportunities and a better market condition. And so by setting that rule, you have a hard daily loss limit and it is established and set up in your chart. Honor that. And then also remove the pressure to recover fast. That's part of the stopping the bleeding of, you don't have to fix it today. You got to just chill for a minute because you're in a red situation and it's red on red if you're in an actual period of drawdown. So stop the bleed and then diagnose honestly. So hopefully you have a trading journal. If you don't, at least try and go and pull back your last 50 trades and then determine what is the leading cause of the ones that lost, psychological or market conditions. And that information is really powerful. That can help you decide where you need to target your adjustments, whether it is in your system or if it is in your personal management. Yeah, I think the market actually is abundant. I fully believe that this market is abundant, and there are really good trades pretty much every day on some time frame or another. But to be patient enough to execute only on the best setups is easier said than done. So to that conversation factor, rebuild slowly, A+ setups only, and minimize your size, because if you're going to have more steady trades, you want to size down and you will be able to rebuild your P&L because you're prioritizing those larger size. And then you can earn your leverage back by the disciplined trades rebuilding on itself. Sizing up is so dangerous. Yeah, it really is a situation of trading full size when market conditions are challenging is a choice, is a little bit of a gambling choice, a little bit, by going full size when the conditions are tricky. Now, I also think to rebuild or to redefine your success. And so rule adherence has got to be a win. You have to think about, if I'm trading my system and I am backing off and I'm honoring my losses and I'm honoring my daily risk and I am treating my whole self to what I need, that is a win. And then the P&L follows when you can lock into that consistent process. Now the long game as well. Play the long game, you guys. Lean into the long game as traders, and that is grit and patience and structure. So if you're in a drawdown, but you are a committed trader who has hung with me this whole hour and believes in this whole process, the P&L will come. Your career is still building. It will get better and bigger and more exciting and can compound, and your leverage can raise. That will come. But if you're in a period where you are red and you are struggling, then it's not right now. And that is fine. That can be where you're at. That can be a very normal part of a trader's journey. And during that period is where you are stepping back a little bit from the larger size, and you are drilling into what is working, what is not working, and how can I win all the time. And so this could be the period that we're in. Now, I think that if you are rebuilding, just think about how it's not starting over. It's just progressing smarter, right? Every experienced trader that we admire has a drawdown story. They all do. The ones who made it through, they don't have massive secrets. If you watch trader interviews, it's not like there's some like magic spell that they're not going to tell anyone because it only works for them. No, they have patience and they lean into structure and their trading system, and they will trade smaller when they're in trouble, and they will cut their losses and they will cut off trading for a day. If you work for a big prop firm physically in person in Manhattan, if you are at your max loss, they're going to kick you out. They're going to put you in sim jail and they're going to say better luck tomorrow. That is what real traders do, is they stop the bleed if they're in a situation. So that's all I got today, you guys. I am Becky. This is BluSky. We have live streams and trader labs, and we are bringing our best for you guys to try and make us all have our best trading lives. And thank you guys for being here with me. I think there's a lot of options out there, but I think BluSky really honors their rules and their commitments to their traders. And then these live streams are fun. So all right, that's what I got. Psychology Tuesday is complete. Thank you for being here. It will be cross-posted on YouTube at the end of the day today. If anyone wants to catch it after the fact or rewatch whatever or share it with a friend, please do, and like and subscribe because that just helps us. All right, everyone. Thank you. Thank you, and take care and trade safe. And if you are rebuilding, you got this. Do it intentionally and reach out to any of us coaches if you need anything ever, because we are all on your team. I'm here for that. I'm going to sign off, team. Have a great rest of your day.